Good evening, all. Ira Epstein with your SPDR ETF stock market wrap-up, and this wrap-up is for the first day of March 2023. Now, please remember, tomorrow is the live webinar day. I'll open the webinar at 12:15. We'll begin it promptly at 12:30. It lasts 20 minutes. I don't record it. Write me your questions now. For those of you that didn't get an invite, this is your last chance to come. We're pretty full, by the way. So all you have to, I think we are full. All you got to do is give it a click here at the very top. People don't always show. They sign up and don't always show. But give a click up here at the top, and what will happen for you is there'll be an icon. Click the icon. That is the area you fill out everything. You'll be sent an email back after you register. In that email, if you have questions on stocks, SPDRs, ETFs, write me in there. Give me the opportunity to create the charts for you, and that way we can go to everything. Does that make sense? It is not the place to do it during the meeting. It is ahead of time for the stocks, SPDRs, ETFs. Futures doesn't really matter to me. Why? There's about 40 futures markets, and I have all the charts already made on those. So very different way to do it. All right. So let's come back here and understand what we've got. The market has been fighting, as you know, the battles since last summer of naysayers saying the Fed will never go the course and they're going to have to back off. Well, now if you go to the swaps page of the CME Group, Fed Watch page, you see that we're building in, peaking out at this point at 5.5% in September, a high probability of that. Okay. If that's the case, you can forget that this year the Fed's going to get to a peak and immediately at the next meeting turn itself and go the other way. Not going to happen. Could things happen between now and September? Well, come on. Of course they could. At 6 months from now, anything can happen, but it's not likely. What's likely is the Fed's going to go in increments up. Watch for the lag effect. Keep going that way. And it is not getting the impact at once in manufacturing. I don't know if you're watching the PMI numbers. They were out today. They're not weak. The ISM numbers, not weak. In fact, the ISM, the head of it was cheering it on, how strong the economy is. And he's right. Be it the employment index or the prices paid index, you got to keep looking at this and you see what's going on. Productivity is also okay. Tomorrow we get the unemployment numbers. We want to see what those are going to do and the impact of those on the market. Now, today you had the big meeting of Tesla. The market was down in front of that, and it fell another 2-3% afterwards as there's no mention of a new car. And I think the market's hanging its hopes that they would come out, as Musk had said before, with a car for the people, a low-price car to really grab market share. Right now, that's not where they're at. They're going to stay with what they've got. And the question is the stock in this environment worth double what it was just months ago? Remember, it was a $100 stock just recently. Now it's $200. Will the market be able to hold on to that? We'll find out. Overall, we've been in a wave to the downside. If you take a look at the S&P, you see this on the chart, how the market has been coming down. Do you remember I told you we were in a consolidation phase right here? Seems so long ago. It was 2 weeks ago. And now the market has answered which way it wants to go. The trend is down, lower highs, lower lows. The objective of the market is just where I've been telling you the first numbers would be the 200-day average, which you're knocking on the door of, in combination with the 100-day average and the Bollinger Band right there. So it did what we were looking for it to do. Once the market cleared the 18-day average to the downside and the bias went down, it was pretty much game over. And you hadn't done that in a long time. It was in January at the beginning, and you popped over it, and you stayed over it all this time, and you finally rolled over to the downside. In terms of momentum, you are not embedded. Embedded means that the red and the blue numbers are going sideways under a 20 reading. Both numbers under 20 today. Not yesterday. You're just oversold. Oversold into support begs for a bounce off those numbers. Do I know if it'll happen? No, but it's what it begs for typically. You either embed by keeping going through those numbers, which isn't easy on the first test of those major moving averages. In UGA, I've told you that I expected this market to churn sideways action. you are getting it. 3 weeks ago, I did a report on gasoline prepping you. I think it was 3 weeks, 2 or 3. And I said that you got to get ready now for the big event, which will be the spring, summer driving. Do we have an uptrend? Not yet. You got a lower low and a higher high and sideways action. But the bias is up, momentum's pointing up, resistance back up here. I'm just waiting for the signals. This may be the way to come in rather than the futures markets. It looks to me like it's going to have better potential than the future with less risk. In the video, I was looking for resistance, and I said it. The first challenge of a Bollinger Band, when you're not embedded means that you have this. You have the numbers going in sideways over the 80 level, the slow stochastics. My slow stochastics, by the way, are very different than yours. My subscribers to my morning videos or my full research get my formula. They can put it in. It is not the simple, hey, I've got a 3, a 5, an 18, or a 20, or whatever number you're using on your front face. It's behind that, and I give you the way to do it, and you can go into, I don't care if it's Thinkorswim or whatever, you can put it all in there, and away you go with it, but only if you're a subscriber of mine. When looking at the markets, I'm looking for the markets to come down here towards the 18-day average and fight their battle. Do I think anything's wrong? No, but that big surge in this where they're going to be the AI leader, it is true. They've got it, but it's a 5-year program. That's a big move when the whole market around you is under some selling pressure. As I said in Tesla, look, you were just at the beginning of the year. I don't want to give you the impression that I'm talking to you last summer. At the beginning of the year, you were in the 100 level. You're at the 200 level. That doesn't mean you have to go back to 100, but this is a stellar story of a stock doubling in a very short period of time. Where is the meat to keep it here when the market on all sides has got problems? Are you looking at trade-in prices on cars? Today it was all over the news that the dealerships are saying people are coming in to do trade-ins, and they're seeing a lot of people as much as $10,000 underwater in their current car. That's not normal. And remember, all the used car prices went up during COVID. New cars weren't available. Now that they're coming in, it's a commodity. If you buy at the wrong time, you get hurt. And that's what's going on with that. So are we trending? We are not. The market went sideways. This was the trend, higher lows, higher highs. And then right up here, right in this time frame, mid-February, you went back and you lost that uptrend, and it's still lost. You're not in a downtrend. You're not in an uptrend. You're in sideways action. In XLF, you're in a downtrend. The question is, it's oversold. If it doesn't embed, this market is begging to get back to the 18-day average to figure out what to do. It tried to stay under the lower band on the black lines. Markets only stay over or under a Bollinger Band 5% of the time. They will still stay within the algorithm 95%. So obviously, it's pretty easy. You get up to that number, why are you trying to buy it? What do you think? You're going to keep going? You want to be that 5%, which is phenomenal. But your next door neighbor wants to fade every bet you have when you're buying over it, and he'll win 95% of the time. Think about that. All right. Interesting. All right. When we look at XLI, downtrend in pretty much sideways action. So this could be a trade that goes either way. I see no edge in this. Let's assume it wants to fall. Well, to make it fall, you had an outside day up. You got to take out today's low either on Thursday or Friday. Otherwise, you're probably going to fight a battle here at the 101.90, what is that, 101.97 area. A close over 101.97, by the way, which is the high of 2 days ago, could give you a lift to the upside and all of a sudden put the upper band in play. I don't see an edge in that market. In stocks, you're marking time. You had come down, didn't quite make it to the lower band, got close to it, oversold, and you've just been drifting. Now, what you have here is a market that's got downside bias. Bias you can define as where is the market in relation to the 18-day average. You can do that on daily charts, weekly, monthly charts. Doesn't matter to me. You can do it on 1-minute charts. If you're under it, you have downside bias. So if you get the swing line turning up, which tells you, hey, where's the highs and lows? And if they're in a pattern of higher lows, higher highs, which is an uptrend, it's an uptrend within a market that's got an overall bearish bias. It's just a correction. It's not a change of direction unless you close over 417.80. When we come to XHB, the home builders, no trends. You got down to the lower Bollinger Bands. I think the pros took their money off the table. You had a downtrend in place, and now the market's looking to see what next is going to happen. I don't think it's made up its mind. On the energy, I don't know if you're watching crude and gasoline, but they've been lifting to the upside. China's come out with new growth numbers, and ever since the COVID ended, and if you were with me here, I told you that I suspected that in early February, the worst of the cases were over. The markets, remember we had the lunar holiday. We came up prior to that where China had lifted the COVID numbers. I'm hearing from different health organizations, not Chinese necessarily, that the COVID peak took place shortly after that time frame. And now people are getting better. The factories are humming and things are doing better. Now, will that last? Remember, when everybody's hunched in, and we know this very well in America, and then all of a sudden you can go out, our economy popped. Everybody pops after that. It's built up demand. Doesn't last. With the world slowing down all around it, Europe, its big partner, the United States that buys goods, and we're buying maybe less of those goods, what goes on? That's what we got to keep our eyes on. But the initial numbers will be bullish on the energies. In GLD, take a look at this red line. Notice how it had been all under here. It's at 24.90. That tells me the downtrend momentum is lost, gone, finished, kaput, goodbye, so long. And the objective was the 18-day average to see what's going to happen there. That's just where you're at in that chart. SLV, you're flirting with losing it, haven't done it. You went back to the resistance of the 200-day average, and you heard what I said, and I'll say it again. I don't like going short the first challenges under a 200 or long on the first challenges over a 200-day average of closes. I let the market work that out, and that's just what I think it's doing. It's a dangerous play here one way or the other. In the copper market, well, if China's getting better and energy's getting better, what about me? That's what copper's screaming. In addition, there's still all those problems going on in Chile, Peru. You've got to keep your eye on copper supplies. But the fact that China factories are moving, we have next week, by the way, I should mention that in China, you got the People's Party Congress. So we're going to get all the mandates and all the fanfare, how they're going to make their economy grow. The word is they're not going to throw a lot of money at the economy this year. That'll be interesting. They have their own reasons. We'll hear why at that party Congress, but it takes place next week. When we look at TLT, still, I'm bearish. I mean, how could you not be? Will we get corrections along the way? Of course we will. But the 18-day average is rushing to the 100. If you cross it, it's another bearish factor driving the price down. You have embedded readings here. Target is still 99.20 on the downside as I see it. In the dollar index, take a look. You're flirting with getting a close under 79. You're 79.84. If it does it, and I suspect it's going to try to do it tomorrow, if it does it, then I think you'll be back at 28.10 very quickly. And if this is losing that, FXE is losing its. FXE lost it. So when it lost it, off to the races, 18-day average, you're there already. You hit it today. 98.51's the number. You went to 98.52. It's like I wrote the script, and it stopped right at it. Now the market is out of the downtrend. Is it going to go into an uptrend? That's going to be the big question that it has to answer. We'll talk about that tomorrow. If you have questions about it in the live webinar, remember to just click up here, and I'll catch you then. Take care. I'm Ira Epstein.